Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Friday, August 2nd, 4:38 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. So, I was on the video last night. For those who watched the podcast, I had some long commentary there as well on the markets this morning. And I am back tonight with today's video. Don is sick with the coronavirus, so I'm covering for him. We wish him well, and hopefully he gets well soon this weekend. State of the market, still in the correction. Yesterday, we talked about potential second leg down. Today, we got that on the week labor market data. GROTECTION gauge, market leaders in a bearish downtrend. It is bleak out there. Absolutely no merchandise to buy. It's the market may be open just like a store, but if there's no merchandise on the shelves, aka stock setups, there's nothing to do. Short term, we are in a bearish downtrend. All major indexes are below the 21 EMA. Medium term, we have it neutral, but we are very close to moving that to a bearish downtrend. The Qs, S&P, and mid caps are below their 50-day moving averages, and the small caps just closed above. Finally, we're still above the longer-term 200-day moving average. What just happened? Yes, we did get the second leg down. And what now? Well, I'll talk about it later in this video. So 21 over 21 list down 3.13%, 0 stocks up, 0 neutral, 21 down. And that just shows the weak breadth of this market. Big 8 down 2.79%, RG8 down 3.55%, S&P down 1.84%, equal weighted RSP down 1.73%, Qs down 2.38%, equal weighted Qs, QQEW down 2.6%, Dow down 1.78%, mid caps down 2.96%, small caps down 3.57%, global 60/40 down 0.7%, and then grow was down about 1.11% today. So jumping right into the charts, starting off with the S&P 500. Yesterday we had a bearish outside reversal, and then today we follow through with a gap down. So far finding support at the 100-day moving average at the highs of right at this breakout level as well. We are seeing extremely elevated volume on the second leg down. If it's stopping volume, if this mark a short-term low, who knows? We'll see and find out in the future. Qs, outside day yesterday, rejecting the 50-day and 21 EMA and followed through below the 100-day today. Go on a weekly, we did land at the 30-week moving average. And as you can see, selling is increasing by the week. This is not a good sign if you're a bull right now. The Dow, outside week reversal, failed breakout and follow through, landing at the 50-day. Mid caps, failed breakout and huge move down. Outside week reversal, that's a failed breakout. This is very concerning, honestly. Russell, same thing. Outside week reversal, rejecting 2300. Concerning action here. Failed breakout. From failed moves comes fast moves. I'll show a 15-minute chart to show that once again. Just see that. We broke out here, failed, huge move down. VIX, huge move up today. At the highs, we're up about 50% on the VIX. Ended the day up about 26%. Volatility is definitely back in the markets. ATRs are expanding. Risk is very much elevated. Like I talked about in the podcast, we haven't seen 150% move in the VIX for the second longest period of time since 1990. And recently, so far, we got 100% move in the VIX. And depending on where you measure it, we actually did get 150% if we're going from these 11.84 lows. Dollar broke this bear flag, sinking today due to the bond market, bond yields sinking as well. And currencies and bond yields are often correlated. And we'll talk about what catalyzed this later on when I go over the tail of the tape. But essentially, it was the labor market data, which followed yesterday's weak manufacturing data. Gold, outside reversal, volatility today on volume. Could be a failed breakout as well. Gold miners leaked off, but still staying relatively tight compared to other stocks. Silver at the lows of the base, still in this consolidation, which is still relatively constructive versus everything else in the markets. Huge volume up on this up move. Consolidation has been on below average volume, and so far this week has seen supportive action on volume. So silver is definitely showing some RS this week. Bitcoin rejected the 50-day today, fall through on volume. Let's get a better view of Bitcoin in a trading view chart as it's more complete. Here's the daily reversal on this day, follow through, now back below the 50-day. We have the 200-day caught up. Here's the weekly chart. And then if we look at a monthly, it's still extremely healthy, a larger term cup with handle, huge volume on the up months, and then very low below average volume on the down months or during this consolidation. So we'll see where that goes. For now, in no man's land. Going back to MarketSmith. Actually, if we're going to talk about bonds, I prefer bonds, TLT, and the treasury yields. I prefer to go to trading view. Let's just pull up a daily. Look at this huge move in the 1 year. Just down 28 basis points. Just some of the biggest moves thus far. Just amazing. 2 years, same thing. Huge move. Just absolutely big move in the 2 year. 10-year as well. Huge move down. This is just pricing a decelerating economy, discounting potential recession, lower growth expectations, and definitely disinflation. I do want to point out, though, we did see the 2-year collapse almost 1.5% in this April 12th through March 24th time period in 2023. And back then, people were screaming hard landing, and we never got one yet. And so we'll see if this is an overreaction once again, but definitely it's corroborating the data, the economic data, and the inflation data as well. So we'll maintain that thesis until something else changes. And these are just some of the biggest moves in bonds we've seen yet. Look at this weekly chart on the 2-year notes, 5-year, 10-year, and T-bond futures. And to me, bond traders, bond investors, the bond market are one of the most liquid markets in the world, especially the US Treasury market, is signaling something is wrong. There is something boiling under the hood. And from what we've seen from the data and the narrative, it is likely that the market is pricing in a recession here. Dollar, as I talked about, sank. So we'll go back to here. I talked about yields and the dollar. Quickly go over crude sinking as well. Same with gasoline. So that is supporting a slowing economy, and the market's not liking it. And I want to make a really important point here. Throughout this bull market so far, since the lows of October 2022, the correlation was when bond yields drop, markets do well. And that's because we were in an inflationary environment where the market narrative was we want to see disinflation. I've talked about this on the podcast before in previous videos, that if the market shifts, and it can very well shift quickly, like we've seen, to a recessionary narrative, as we've seen this week, it is not good for equities. So for those wondering, why are bond yields and equities directly correlated now? Shouldn't they be inversely correlated? The narrative has shifted. Traditionally, bad labor market data, bad economic data is always bad for the markets. But we were in a special regimen when we wanted a weaker economy to get inflation under control. And now that we have that, further weakness makes the Fed go to the other side of the risks, which is maximum employment and balancing price stability. So we'll see what the Fed does in September. All right. So going back, we'll quickly go over the Mag 7 because I think it's important to do that. I did it on the podcast already, but Apple had earnings. RS line broke this downtrend line. This is absolutely the strongest Mag 7 today and the only one that closed in the green. Amazon pooped the bed after earnings, closed below the 200-day, no go zone. Microsoft closed right above the 200-day. So we'll have to see that hold. Weekly's back to the 40-week. Meta, volatility. Look at this. Volatility surrounding earnings, no go zone. NVIDIA actually shook out the 100-day and closed high of the day. So we'll see what that means. Who knows? There's definitely demand here at this 100 level. That could be an area of support. Google hanging in there, closed above the 200-day. Still hasn't filled this gap from the last earnings yet. Netflix just leaking below, RS line confirming, closed below the 100-day. And Tesla closed below the 50-day and now approaching the 200-day. You can see this is just another lower high so far in this weekly downtrend. Going back to TradingView, I want to compare the Big 8 index, which is at this previous breakout level at the 20-week, 100-day area. The RGA has completely saw an outside week reversal, as you can see here, back below the 30-week moving average, 150-day. No go zone. This just shows how destructive and how quick moves can be in this market, and why you really have to manage risk and respect your stops and listen to the market, take it for what it is. That's what we've done. We've reduced our sizing drastically. So we're doing exactly what the protection part of GROTECTION is. So that is that. Now let's go to the tail of the tape. Definitely a lot of updates in the tail of the tape. So I'll try to go through things a bit slowly and talk about what's notable. So once again, we are in a correction because of the narratives have shifted. I have yields down and dollar down as a bad thing now because of the recessionary narrative. NASI RSI is down as well. VIX today up 32%. Fear and greed at one point hit extreme fear. So that is definitely a good contrarian signal, but that doesn't mean we just plunge in. AAII still heated, but that was based off last week's action. I'm sure this is going to come down significantly next Thursday. Same with the NAM. We're definitely operating under the bear case right now. Sustained break below the 21 EMA and 50-day. We're still above the 100-day on the S&P. The news that catalyzed today's gap down and even yesterday's selling is weak economic data. So yesterday we got manufacturing data and ADP employment. Market did not like that, so we saw an outside day reversal. Today was followed by recessionary labor market data. We saw unemployment tick up to 4.3%. Non-farm payrolls missed as well. Average work week dropped, and same with pay dropped as well. So day count, we're down 2 now. 2 days below the 8 EMA, 21. 2 days below the 21 EMA. Expectations are negative as of now. Action, gap down 1.69%, and it was just relentless selling all day. Nothing really much to add there. Sectors, bond prices were hugely up. Staples and real estate were slightly up. But other than that, it was broad selling all around. Grow right now, we're just watching the rest of our S&P position. We trimmed UPRO. That brought us down to 0.46 beta. And bottom line, yes, the second down did come. So I talked about a little bit about what to expect now, but let's get into that a little bit more. So starting off with the S&P, what now? We found support this 100-day and the top of this base. This coincides with the 20-week as well. We are seeing elevated volume, so one can see that as further distribution, or you see that as capitulation and what I call stopping volume. Just like how on the upside, we have the largest day up on the highest volume and largest spread, that can indicate potential reversal. Let me go to NVIDIA. On this day right here, we have the largest volume and a reversal. So we're looking for something like that. SMCI was actually more pronounced. As you can see, just largest day up on this day was up 14% in this entire run. on huge volume, 25 million volume, which is the highest volume ever. And that definitely was near this exhaustion highs. So back to stopping volume. This may or may not be the low. We won't know until the future, but definitely a huge area of support. And we'll watch against this level to see if we can get some chop and a follow through day in the markets. But once again, we have no merchandise to buy right now. There are no stocks available. Very, very bad action. A lot of volatility, a lot of base failures, pivot failures, breakout reversals. So it's just a wait and watch market. Same with the NASDAQ. Also at a pretty big level here. We did close below the 100-day and the 20-week, but we land at the 30-week. And that's contained pretty much this whole bull run so far. 40-week is very, very critical. As you can see, the last correction went back down to the 40-week. So this is definitely an area that is critical, and we'll see what happens when we get to this area right here. Once again, the largest volume during this correction so far. So potentially that is stopping volume. As you can see, largest volume in the correction, largest volume in the correction thus far. That could be stopping volume. That could indicate potentially we marked a low. We'll see. I tweeted, if you follow me, at social media, Discords, chat rooms. The velocity of flow of information is so fast now with the likes of Perplexity and AI chatbots that everyone gets the information so quickly, and people are more emotional than ever. People are pricing in, extrapolating the future like we've never seen before. So these are fast markets, and that is why we react fast as well. Charts of interest, really the one thing maybe I'd talk about is ONON, still kind of holding in there. RS line is still an uptrend here, still in this base, and we're forming a base on base, hasn't completely fallen apart like many other stocks. Last quarter, we saw 123% year-over-year earnings, 23% year-over-year revenue growth, and 26% pre-tax margins. We have earnings in 11 days, so we'll see how that goes. 156 projected earnings growth in 2024. Really nice IPO base. Maybe we get a breakaway gap in that name. The other four names are just previous big key leaders that I actually consider model book stocks for this 2022 through 2024 timeframe. And I've actually marked it up for my own model book. And these saw distributive action far before this recent market correction. And those are quite harbingers for this correction that we're in. NVIDIA, outside day reversal. I've been talking about these outside day reversals. As you can see, NVIDIA topped on 620. The S&P topped on 716. So NVIDIA topped a month before the market. That was definitely a first sign. SMCI topped 3.8 far before this recent index market top. And the only reason why the index has chugged higher since this March area, which I denote as when the easy dollar environment ended and when primarily growth stocks in that easy trend ended, is because the Mag 7 has driven this move higher here. But now that they've given it back, so has the market. So we're pretty much back at those March highs. ELF as well, topped March 2024. Tried coming back, double topped, and failed so far. And so far, this is becoming a stage 3 top now. 30-40 week moving average are catching the price and flattening. Earnings in 6 days. If this tanks and we get a gap down, that's officially in stage 4, and that's a time to look for a potential short in this name. RS line is trending down as well. ANF was a leader throughout this bull market as well. This is definitely stage 3 topping action. Look at this RS line breaking the shorter term RSMA and the longer term MA, and we're just slicing through 20 week and 30 week. This is definitely stage 3 action, and arguably it's almost heading to stage 4. RS line as well. And again, this name topped a little bit after that March period because of strong earnings, but that marked the top. Well, 4 absolute leaders marking the tops. Let's just talk about crowd actually real quick. Even though they had their cybersecurity problems, this still big leader of this run completely collapses below the 200-day and 40 week. If you're not managing risk and having stops, God bless you're down 45% off the 52-week high. So just like that, in 3 weeks, down 45%. Almost whatever your position is, cut in half. That is why we must manage risk first. I guess I'll quickly go over the 21 over 21 list. See the 3 stocks that held up the best: ISRG, healthcare name; LNTH, another healthcare name, but that is not looking good. IBIT Bitcoin is holding up. I'm still pretty favorable on Bitcoin, but we really need to see how it trades going forward. Biggest losers, KKR. I mean, if the economy is decelerating, private equity is not going to do well. No one's going to want to do deals. Firms are going to be more passive. GE, failed breakout so far as well, back to the 100-day. CRS, still above the 21 EMA, but not good action. Palantir looks like a failed breakout so far too. And in the right environment, these double tops are definitely really good shortable ideas if you have a margin individual brokerage account where you can short. Other than that, staying cash is definitely the best option. And so I wanted to add one more thing that's relevant to the tail of the tape and the recessionary market data. Let me pull up the CME Fed Watch tool. We went from 7 rate cuts to almost no rate cuts because we thought inflation was coming back up. And now with some disinflation, PCE and cooler CPI data, and some weaker economic data, we now are pricing in 3 rate cuts by the end of the year. And there's actually 70% probability. It was 80% this morning for a 50 basis point rate cut in September. So we see how quickly the markets can change, how emotional, how volatile people's narratives are. And we just always have to be ready, paying attention to the market narrative, seeing if the action corroborates it or if we get news failures, and we have to react accordingly. And yeah, so that is going to wrap it for this week. I hope you enjoyed my market commentary last night in the podcast, as well as today. I'll be doing the weekend video again this week by myself. Connor, it's his birthday, so you guys follow him, wish him happy birthday. He turns 23, the year of Michael Jordan, so hopefully it's a good year for him. And with that said, I'm going to wrap it up. As always, I would love to hear from you. My email is ted@revereasset.com. Then you can reach out to Dan and Don at revereasset.com. You can reach out to me on Twitter as well, Ted H. Zhang. Our phone is 855 Real Wealth, and that is 855-732-5932. You can also visit our website at revereasset.com and our YouTube as well as revereasset.com, or just Revere Asset. We named our flagship portfolio GROTECTION for this very purpose. For the last year and a half, we've been mainly focused on growing assets with some intermediate corrections where we've protected assets. And now we're exercising the protection part of GROTECTION. So again, we want to participate when we're in uptrends, and we have rules and things we look for in the stocks and the health and breadth of leaders, as well as price and volume characteristics of the indexes to get us re-engaged when it's time. But right now, it's keeping us out, protecting assets. And just wanted to say that GROTECTION is down about 5% off highs. S&P is down about 5.6 to 6%, and the NASDAQ is down over 10%. So we've done our job so far. We will continue protecting, focus on risk management, as that is our number one job. And once the opportunities present themselves, we'll re-engage with the markets. If you're interested in becoming a client, please reach out. And with that said, I'll wrap it up today. Today's Friday, August 2nd, 5:02 p.m. This is Ted Zhang with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend. And tune into my weekend video. I'll be doing more analysis there, going over just a wider set of indicators, things I'm looking at, definitely a thorough analysis of the sectors and stocks after our scan this weekend. So hope you enjoyed today, and I'll see you guys this weekend.